Ideal Professionals video tutorials. In this tutorial, we're looking at the first model, model 1, that is statement of cash flows. Looking at how to create statement of cash flow with Excel. Step 1, the problem. Step 2, modeling the strategy. Step 3, building the model. Step 4, test the model. And step 5, uses of the model. So, step 1, what is the problem? We are given the historical income statement and balance sheet for GLX Limited for 1999 to 2002. It will be given to you in the DVD or sent to your email. If it is not in your DVD, call the number showing on your screen. In this statement, you identify all the number that should be calculated based on the other numbers, and we check the appropriate formulas. They will also look at the reformatted statement in a separate worksheet that looks more attractive and readable. This is model 1, the historical income statement and balance sheet for GLX Limited. Look at sales. We have 1999 to 2002. This sales, cost of sales. You will note that this particular income statement, cost of sales is in positive, so making the formula equals to B6 minus B7 to get our gross operating income. So you must be consistent with any formula you are applying. So all I need was just to drag the formula and copy it to other cell. Copy it across board. So if you check it, it's the same formula. Then we are also giving the selling, general and admin expenses. They also note that the income is negative. So to now get our earning before interest and tax, this is our formula. That is B8, that is 555.8 minus B10, that is the selling expenses, to B12, that is other net income stroke expenses. So that's the formula. Then we copy it across board. So there are many ways of copying. You can copy and paste. You can use this copy paste, or you can drag. Once you see the small tiny plus, let me, even this has been done before, but let me just delete this and redo it. So if I now select this, I will now drag it. So that's how to copy a formula using relative referencing. It's just change the column. Now we are also giving the interest income. given the interest income, we will now get our pre-tax income, that is B13, our EBIT, then the sum of B15, that is our interest income, to B16, we get our pre-tax income. Then we also have our income tax. Then the formula will now be this minus this, that is B17 minus B19. Then we now have B20, that's our net income minus dividend, to get our addition to retained earnings. Then we also have our balance sheet given to us, our balance sheet. So the same thing applies. That's already been the sum of all this to get our total current asset. Then this property and accumulated depreciation to get our property, plant and equipment net. Then total non-current asset, is the sum of B37 and B35. Then we also have our, then everything will be copied for the years, that's 1999 to 2002. Then same thing applies to this sum of all this. Then we also have total liability, that is B46, the total current liability, plus B48 to B50. That will give our total liability. So all this has been done. So the next thing to look is what modeling strategy. The strategy is to create the well formatted income statement and balance sheet. This is our well formatted income statement. What was done? This was highlighted, and we removed the added comma and we reduced the indent. We increased decimal to 1 decimal point. Then we did also to remove the grid lines. Then we now underlined using from the home tab. We use bottom border. Then same applied here. Then we now use for the net income, we also use the top and double bottom border. So all this has been done for you. So this is our well formatted balance sheet. So this is all the subtotals and totals has been calculated. So the next thing we want to now go to is building the model. If I click on this, I can double click, press cash flow statement. Cash flow statement. Say enter. So remember, what you want to do is to create a corresponding statement of cash flow from the income statement and balance sheet. So we want to create statement of cash flow on a separate worksheet and now link it to the income and balance sheet, so that none of the numbers in them has to be re-entered manually. We don't want to re-enter any number manually, so it's going to be linked to our historical income statement. So let me hide this and hide this also, so we focus on this. So it's our statement cash flow in millions of naira. In the new worksheet, you create the heading and labels. Now I want to now type all the, we have cash flow from operating activities, from investing activities, and financing activities. So let me type everything into this column. So this is our cash flow statement. So we have cash flow from operating activities, from investing, and from financing. Now our net income. To get our net income, and note what we are working on is 2000, 2001, 2002. Assuming we have the figures for 1998, we'll be able to work with 1999. To get our net income, the first thing to do for any formula is to press equals to. Then from equals to, I will now go to the sheet. I named it historical income statement and balance sheet, not to make it so long. So once I select on my net income, this is my net income for 2000, then I'll press enter. So it automatically brought it. So instead of me to do the same thing, I can just copy and paste or drag. So let's confirm this. 132.7, 132.8. So this is called relative referencing. So let's confirm that from our income statement. This is it, 1. So this is correct. We now go back to our cash flow. Our depreciation expenses. So we now go back to our historical. So this is our depreciation, 52. So we come to cash flow statement. The same way is equals to, we will now go to the sheet and select it, 40,000. I'll say, so look at the formula. That means referencing a sheet C11. This is C and 11, column C, row 11. So I'll press enter. So it does giving me the answer. So what I need to do now is to format to 1 decimal point. Now press comma, then I'll now decrease the decimal point by 1. So once I copy this, because another style I can copy, then I can use paste. I'll press my escape key. You can confirm that. The next thing we want to look at is decrease and increase in our account receivables. The strategy we want to adopt now is we use column for all current assets. When there is a decrease or increase in current assets, that is our account receivables, inventory, and other current assets, we are going to deduct column B from column C. What am I saying? This is our balance sheet. So we have for 1999, 2000, 2002. So for our account receivables, inventory, we say B28 minus B minus C28. To do that, for any formula, I must press the equals to. Then we'll now go to the place I want to take it. That is this one. I'll now press minus. I'll now select the next one. Now press enter. So it gave me minus 95. Because they are on the same, I can drag it like this, and also because they are on the same column, I can just come down a little. You need to be careful. Because it's relative referencing. It reference, change the cell number. Can confirm that. Also, the next one to look at is, you notice that this is B30 minus C30. Same applies to this B minus C. Just remember B minus C, B minus C, and it's referencing the sheet. That's why we have HIS and BS. That's the name of the sheet. So for account receivable, it is increase is added while decrease is deducted. so we just reverse it. We will now say is equals to, instead of B minus C, we will now say C minus B. So let's select it. Is equals to, then we go now to the next one, account receivables. Account receivables, you now say C, now press the minus sign, select next one, then you say enter. Then I will do the same way and drag. So I need to now locate other current liability, because other current liability is not directly under account payable, so it will select directive reference for short-term debt. So I need to be very careful about that. So I need to do it one by one. So this other current liability, so I'll come to my cash flow and it's my equals to sign. Now I'll come and select press my minus sign, select the next one and enter. And then I will now drag as usual. Then we have deferred income, my equals to also in the next one. My minus sign, enter. Now drag as usual. Then go to the next one. Increase or decrease in then we have our other non-current liability is equals to other non-current liability, other non-current liability minus sign this, then enter. Inconsistent formula, let me edit this and see. And just tell it to ignore it. Don't worry, just ignore. Now drag this. Okay, this other non-current liability. Let me press delete. Other non-current liability. Is equals to other non-current liability minus enter 5. Then I can now sum up I just come to auto sum. Yes, you guess right. Enter. Now drag it to the next stage. Then I'll make it bold. You can also increase the font. Then the next one is addition to property, plant and equipment will be deducted. So because it's an outflow of cash, so fixed asset 2 will be column B minus C, that is B minus C. So have our equals to sign, come to press the minus sign, press this, enter. Then we drag as relative reference. Then we also go to the next one, equals to sign, then come to our investment, this minus this, enter. We'll copy it, select this also, auto sum, you guess right, enter. I'll drag it across, make it bold and increase the font a little. Now the next thing is issuance of debt, issuance or repayment of short-term debt. So I have the equals to sign, then come to short-term debt. This is column B minus column C, column C minus column B. All liabilities is C minus B, while all assets is B minus C, that is column B minus column C. So minus sign, enter. Now drag it across, then now my equals to sign again, my short-term debt, my long-term debt, minus, enter. Now drag it across, then now go to equity, that's our paid in capital, that will be start with equals to, then we select column C, press minus, press enter. So we'll copy it across. Then we have our, when we go to our to say our dividend, we go to our income statement. So our income statement for 2000 38 2001. So I can just say is equals to, now go to my income statement and select dividend. Now press enter. But you note that dividend is an outflow, so it ought, dividend paid is an outflow, it ought to be in negative. So I can just come here and edit the formula and just put my minus, and I'll press enter. And I can now drag, I can now copy it across. So I can now use my auto sum, say enter. Now I'll make it bold and increase the font. So now, to get my net change in cash and equitable securities, I want to now add these three together, 1 2 3. So I'll say is equals to, I'll select this, I'll press shift and equal to make it plus, select this, shift and equal to make it plus, select this also and enter. I can now drag it across. So let's now make it bold and increase font. So the next thing now is to now confirm what we have done so far. What's our beginning cash and marketable security, then ending cash and marketable security. So we are going to come to our balance sheet. This is our cash and marketable security. The beginning balance for 2000 is 99, that is 25.6, while the ending balance is 323, and so on. So what I need to just do is to come to my cash flow statement. I'll say is equals to, then I'll select the beginning, that is 25, say enter, then I'll copy it across. Also, the ending balance is for 2000 is 23, and so on and so forth. So I'll just come here, say equals to, then I'll select this, say enter, and I will now drag across. So now, to get my net change in cash and marketable securities, I'll now say is equals to ending balance minus beginning balance. So that is 23. I'll select it, minus, enter. You can now drag it across. Now make it bold and increase the font. So that's how to build the model. Now to test the model, you now because here you have the actual income statement and balance sheet, as long as your number agree with them, your model should be correct. For the means of cash flow, we created an independent check, which is the best to test all statement of cash flow. So way to check is once 2.6, 2.6, 1.9, 1.9. Also, if you now look at it, you can say, for let's just take one account receivables. You can now say account receivables. Was there an increase or decrease in account receivables? Is there an increase or decrease in account receivables? It was 1999, it was 99.4. Now it is 1 02.9. So it's an increase, so you are going to deduct. So once you get the difference with your calculator, you can now come here and confirm that the increase will be deducted. Increase, deduct. So that is how to test our model. So uses of the model. This model should enhance the understanding of financial statements and their interconnection. You will find this knowledge useful in both understanding them and building other financial statement models. In this tutorial, we created cash flow, statement of cash flow. That's what we called cash flow statement. Then the steps were: the problem was to create a cash flow statement. Step 2 was modeling the strategy. Step 3 was the main task of building the model, the test the model, and also the uses of the model. I hope this has been informative for you, and I want to thank you for viewing.